Well, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is Friday the 26th, and we had a continuation of the trend lower here for the grains. Corn trading down 3 cents, soybeans down 12 3/4, and wheat in Chicago mostly unchanged here, trading up only 3/4 cents. Logan, obviously, we've been trending down here for the most part of the week, but how much lower can we go?
Oh, we keep getting this question here in the office, and if you take a look at the monthly chart of the December 2014 corn contract, we're really looking for firm support around $3 per bushel. Soybeans remain a little bit of a different story here. 880 is the next area of key technical support, and if through there, we're looking at this market taking a run at $8. If you look at soybeans from a historical context, when we tend to see stocks to use, as we're seeing here this year, we typically see $7.50 to $8 on the board. You know, from a fundamental standpoint, I think that's where a lot of people are looking. So I guess when comparing corn and soybeans right now, it does look like soybeans may have a little bit more downside risk. But in both cases, I don't think it's a bad idea to get some protection in place. It's obviously already been a very big move, but if we look at these markets, as I said, from a fundamental standpoint, it does look like things could continue to drift lower as we move into harvest. Now, we are going to continue to have harvest pressure on the market, and that does impact the cash market at this time of year. We certainly saw a lot of activity in the barge market here this last week.
Absolutely. We saw a lot of activity in the cash market in general. We saw basis move lower, both on spot and new crop. But let's take a look here along the rivers. We saw a rapid increase in barge rates. We're likely to continue to see this thing move higher here as we move into more of the peak of harvest. You know, we're nowhere near the peak of harvest.
Right.
And of course, I think this is a little bit of preparation here, trying to lock in some of these rates to be able to move the grain down to the Gulf, the significant amount of crop that's coming out of the fields. You can see that Memphis barge rate really spiking there in the last week here.
Right.
So that's putting a negative pressure on basis at river terminals and across the U.S. When you look at the spot soybeans, that's something we saw huge movement. We saw 80 cents lower here on average across the U.S. in terms of spot soybean basis, 149.5 cents lower here when you look at plants alone. Really where we saw the biggest basis strength was at these soybean plants. A lot of demand late in the year when crops or when stocks were very limited. So we saw, you know, in some areas earlier part of September, plus 400 off of that November contract.
Yep.
We've seen a lot of that premium sucked right out of the market here in the last week. So that's one of the reasons why we saw so much basis weakness in soybeans. But here's a great slide of new crop basis. We saw new crop basis down 3 cents on average across the U.S. I wouldn't be surprised if some of these barge rates are affecting some of this new crop soybean basis.
Yep.
You know, we did see areas, different states where they moved lower. North Dakota is one of them, down 4 and a fourth here, and you look at Minnesota, and you also look at Illinois. Those are both states where we saw significant decreases in the basis for soybeans.
Right.
The bottom line here for producers, what we've been telling producers, you got to be paying attention to your cash markets because this is a very atypical year. It looks as though new crop basis has adjusted here in the last week. You've got to be paying close attention to the trends in your region. You may find that some areas bounce out of basis lows during harvest a lot quicker than others, presenting a great trucking opportunity if you're hauling right out of the combine and delivering to the elevator. So we have a great tool to help you guys do that. Give us a call at 877-472-4607 if you want to take a demo of that cash market intelligence platform.
Yeah, absolutely. Next week should be a relatively busy week in the grain market. Monday, we're going to be getting crop progress numbers. We'll get an update on corn and soybean harvest progress across the grain belt. Tuesday, we're getting the September 1st quarterly grain stocks, so that could have important implications for the 2013-14 carryout that we're then going to see on the October 10th USDA WASDE report. And then, as always, we have ethanol numbers out Wednesday, export sales on Thursday. Just a reminder here, as we're approaching harvest, if you want to have live quotes out of Chicago on your iPad or iPhone in the cab of the harvester here this fall, visit us over at grainhedge.com. Take a demo. You can take a 2-week trial and see if it's something that would be useful for your farming operation. As always, if you have questions, call the office, 877-472-4607. Have a great weekend. We'll see you back on here on Monday for the USDA Crop Progress Report.